Teresa Castle, and I'm here with Tarek Morshed with the Morshed Group at Sotheby's Residential Real Estate in Austin, Texas. Today we will discuss what happened in Q2 of 2022 in the market and where the market is going in 2022. Also, very importantly, what that all means, whether you are a buyer or a seller. Tarek, welcome, and thank you for joining us here today.
Well, thank you. Excited to be here to share our knowledge and what's been happening and what we believe is going to be happening and unfolding for the rest of the year in the market.
So Tarek, tell us, what did happen in the real estate market in Q2 of 2022?
So there are three main things to note in Q2. Number one, Austin was a top 5 market nationwide in terms of strength and low inventory, but definitely saw a tempering towards normalcy due to the equities market pulling back, interest rates rising from 3.5% to 5.5%, and then of course inflation. At the Morshed Group at the beginning of Q4 of last year, we were sharing that 2022 would be a year where things finally cooled, and that instead of seeing 20% appreciation, we would end up with probably 7 to 10% appreciation, which historically is still a great appreciation rate, and it seems that we're on track for that. Number two, values in Q2 inched up about 2%, and supply ended at 2 months, which basically means there are about 6,000 homes on the market. This is actually up from 1 month and 3,000 homes in Q1. But for context, a 6-month supply is an equilibrium point in the market between buyer and seller demand. And at a 6-month supply, we would have 18,000 homes available. So at 3,000 homes and a 2-month supply, while that's up from the 3,000 homes, it's still rather undersupplied, right? And finally, tied to all of that, we saw a sudden move to where buyers were pausing in the marketplace. While the supply is at 2 months, and that says we should be busier, the fear, in the bigger picture concerns and has just kind of caused buyers to hit the pause button in Q2. And almost as though the market is in a lot worse shape than it actually really is. So to share some real world examples here, this home in Rollingwood, which is a sought after neighborhood in Westlake and minutes to downtown, where prices range from $3 million to $15 million, in Q1, this would have sold in 1 to 2 days, given the finishes, price, and lot size. Our client was the buyer, and it was listed at about $5.95 million and was about $100K overpriced. It didn't end up having multiple offers due to a few layout issues and some portions of the home needing to be updated. And after about 45 days, our client was able to actually purchase it 10% below list price. And that just simply wouldn't have happened in Q1, right? We would have still seen 15 offers, or at least 10, and multiple offers, and going about 10% over list price, if not more. This next home, was a really unique opportunity in Barton Hills, which is a central neighborhood, close to the revered Barton Springs and Zilker Park, as well as downtown. And prices range here from $800,000 to $7 million. We represent the seller, and it was listed just below $2 million. It's a real unicorn for Central, given it's on a 0.46 acre lot. The home is in solid condition, though the last updates were done in the early 2000s. The outdoor living, pool, and yard are just really special, as you can see in these pictures. And just 45 days ago, traditional buyers or custom builders would have jumped all over it at $2 million. It ended up taking us about 3 weeks to sell, and we didn't receive multiple offers. However, we went under contract at a price very close to list. So this example, as well as the other one in Rollingwood, underscores the buyer psychology currently out there in the market, where there's a little more patience right? And folks are a little slower to make a decision, even though something like this was just such a unicorn in some real ways, and there isn't much to choose from still in the market at 2-month supply.
So Tarek, where is the market currently, and where do you predict it's going for the rest of the year for 2022?
Well, first, to be clear, we don't believe there's a major pullback that's going to happen in Austin, primarily due to inventory still being quite inverted at the 2-month supply. Also, we're the top job market in the U.S. still per Wall Street Journal. New construction is still really lagging behind demand. And, there's just major economic developments that are still in process and in the works throughout the city. And there's a lot of concern, even on a national level right now, or in some dialogue around Austin's market likely experiencing a big correction due to our huge jump in values over the last 2 years and far outpacing the average household income growth. But given what I've just shared and Austin's market still being very affordable compared to similar tech housing markets, we just don't feel this is going to happen. However, we have been saying that 15 to 20% appreciation rates through these pandemic years just simply isn't sustainable, and we're finally just seeing that come to a fruition. So what we see in Q3 is going to end up flat, and the year ends up around 7 to 9% up on values overall versus the 20% we saw last year as well as the year before. And also for the rest of the year, we feel the 500K to 700K as well as the 1 million to 3 million bands, price bands, will lead the way on demand. So per this map, the 1 million to 3 million band generally translates to the red areas such as Central, City, and Westlake areas. And in the 500K to 700K band, our bands are depicted in these yellow areas. And in general, those would be suburb markets such as Round Rock, Cedar Park, Dripping Springs, and so on. And note that all the other areas will be fine also, right? It's just that we believe these particular bands will perform the best for the remaining part of 2022.
So Tarek, what does this all mean for sellers?
So for sellers, as we've been mentioning, since Q3 of really 2021 to a lot of our folks and clients, that was the peak. And so being past the peak, pricing correctly and presenting really well is important now. Buyers are, gating, moving forward quickly, like I was mentioning earlier, given the economic tailwinds and hits to everyone's pocketbooks. Also, there's been a big adjusting to a huge bump in interest rates for buyers. And so buyers just simply aren't going to pay a seller either above what the home is worth, and like I said earlier, there's just trepidation in the market because of what's going on in the bigger picture versus, the fundamentals being off in Austin real estate, because that's not the case, right? So as a seller, to sell in the first few weeks, you have to get ahead of the market by pricing right. Otherwise, you're going to chase the market down as it recalibrates. And, don't expect multiple offers moving forward in weekend one. And at the same time, I think that after the buyer emotionality around the stock market rates and inflation settle, as a seller, you'll still do well and be able to sell. Or even in this time with some of that going on, just have to be a little bit patient. And again, really do the things I mentioned, such as price really correctly instead of overpriced to see what you might get, and really stage your home, powerfully and beautifully.
Tarek, what does this all mean for buyers?
Well, for buyers, kind of the opposite, if you will, it holds true. The intensity of terms favoring sellers and being way above list has finally really just come to a stop, right? We're probably only seeing multiple offers, and moving forward, I think this will be the case for the rest of 2022. Just, maybe 10-15% of the time, right? And so at the same time, I wouldn't say as a buyer that you should wait, as inventory still will remain below equilibrium even past Q2 and Q3, which means you're not going to get steals versus maybe some negotiability and or not being in multiple offers and paying way over premium. And combined with rates, interest rates, that is, inching up further, that means the cost is still very real to you, even if prices are no longer aggressively moving up. So it's just a good time to still buy, and I would still recommend to buyers buying this year or early next year, where you'll have a little more choice and pliability. Then given Austin's dynamic, we think buyers have about maybe 6 months before the market kind of strengthens back up again and some of these fears subside. Rates at the same time are going to rise. So it's just a good kind of a time frame in the next 6 months to really go ahead and make a move, in our opinion.
Well, Tarek, overall, that sounds like good news, and I think you've provided a lot of great information here today to ease the fears of both buyers and sellers in this quickly changing market.
Oh, thank you. I'm glad we're able to do it. I'm glad we're able to really educate folks out there. And as always, this update will be on our website, including past updates. And of course, really relevant monthly articles moving forward. So I really encourage everybody to go to our website and stay abreast of what's going on. And we'll look forward to the next quarterly market update.
Great. Well, thank you for joining us here today.
Thank you.